Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for the evening of Wednesday, and we're now at October 6th, 2021. Well, the surprise, I don't think it was a surprise. Mitch McConnell has reached out and offered an olive branch to the Democrats in the sense that with a fixed debt ceiling limit, he's willing to go to a date in December to give the Democrats time to figure out their next move. What isn't going to happen is the Republicans aren't going to join on to this increase in spending. So that part you've got for the bills, but for the debt ceiling, they've offered the olive branch. They've really got the Democrats cornered. They can't afford not to take this. Otherwise, they're the ones now that caused the situation. So you're going to wake up in the morning. There should be a deal. I wish I could say I know there's a deal, but there should be a deal. We kick. I got my leg going here. We're kicking. We're going to kick the can down the road, and now the Democrats can either go in and play with their reconstruction bill, or they can get to work on a real debt ceiling limit, or they can do a number of things. I don't know. But this is October 6th. That leaves the Senate to go on vacation next week. You do know that. They're leaving on vacation. That's what you're going to do. So what's it going to do for the markets? Because enough of the politics. Probably a pop. You're not getting a huge one tonight in the futures, but you're getting a pop. So let's take a look at Microsoft. As you know, I've been saying, I expect this gap to be filled. The market, watch this, has filled it. That's what I was looking for. Could we reach into this area too? Yeah, easily. So wouldn't surprise me to get a bit more of a pop in these markets. You've got a lower low, higher high. That is not a trend. The market's resistance right here. The 18-day moving average of closes. When you take a look at the Bollinger Bands, you ran them on the downside, got into the neighborhood of the 100-day average in green with the lower Bollinger Band, and that gave you the pop. Okay, so we ended a swing from the downside from up here to the lows 3 days ago, and now that part of the game is over. I don't know what's next because the chart isn't giving you that picture. You've lost and have turned up momentum. So momentum up, bias down, no trend. In Apple, well, all you need to do is get back over now 142.24 and you end this downtrend. I think that's what's going to happen. Looks to me like the 138.27 area is the bottom. It coincided with, again, the 100-day average in the lower band. I'm looking for a pop here. The market is oversold. I will look for resistance at 144.67. So a relief pop, and if that happens, the break that began, I want to show this to you all the way, follow my finger up here, will have come to an end. That does not mean you're starting an uptrend. You've ended that part of the swing. In ARK, Kathy Woods has decided to take, I think she has like 3 dozen employees or something. They're leaving New York and they're heading to St. Petersburg, Florida. Good move, okay? Get out of the areas that you don't have to be in. Most people want to live in Florida. Think of the tax advantages over New York and the cost of living advantages. I don't know if you've ever been to St. Petersburg. It's absolutely beautiful. I myself prefer the east side of the state. I like the action that's over there, but it's very, very pretty in St. Petersburg. In any case, you're still with an embedded reading. You're getting a little bit of a bounce. I don't know if this is going to be enough to help her because it doesn't do much. Keep your eye in the morning on the slow stochastic reading. You have an 18.5 number. If it gets over 20, it's going to hold the day, any new selling, and anything over 111.71 will end this peak where you broke from right here all the way down here, maybe setting up a rally back into the 114s. I doubt it has anything to do with her move. In the SPDR ETF for the industrial sector, any move now back over 100.25 actually throws the trend up. You'll have a pattern of higher lows, then higher highs over the 18-day average, opening the door maybe for the 102.50 or just slightly under that level. You'd have to get back under this low if that occurs, back in getting over 126. In the semiconductor, is this going to finally be the end of this break? I think so. I'm not there yet. I have no reason other than to say I think so. The chart action isn't there. The ideal situation would have been to get down to 192.49 to 190.05, the combination of the 100 and that. But I think the markets, when we wake up in the morning, Asia will take over the trade tonight, and then Europe, and they probably got a sigh of relief. Okay, the debt ceiling issue's out of the way. The Senate's going to go on vacation next week. This gives the Democrats time to either make a deal, break a deal, whatever they've got to do. But at least the U.S. isn't going to shut down right now. You know, the president called on Jimmy Dimon, so many of the heads of banks, what were they going to do? And they said that they're turning their task force loose now, preparing that if there is no agreement between Democrats and Republicans on this debt ceiling, remember, all we did is kick the can down the road. What does it mean? They too got a break. Everybody's going to prepare. And that puts pressure on both parties. You do understand that. In CNBC, the cannabis, well, even that news didn't get this market much higher. The market's down 6 cents, pun on words, much higher. Oversold, just a terrible looking chart. Yeah, at some point you're going to get short covering away from this Bollinger Band, but the trend is down. The market, in my opinion, you have to look to see what it does. I would expect resistance at the 18-day average, but I don't think you're attracting a lot of new selling in an oversold condition. In the home builders, we embedded. Now, let's talk about that. Both numbers today are under 20. Watch over here again. Under 20 yesterday, under 20 the day before, and the day before. So you've been embedded. You haven't broken very much off that. The 100-day average has been holding that. So what do you do when you get a play like that? Well, number one, I look to see what's going to happen if you get a pop-off an event like the debt ceiling. So early on in the morning, I think the market's going to pay attention to that. If the market gets up and over 72.74, it will be a sign that the market doesn't want to reach into the 200-day average and might be ready to say, okay, that's it. But you have to watch the red line on the slow stochastic. I would not, if it were me advising you, and I'm not advising you, I think that the traders should not have resting orders in to go short. If you lose the embedded reading, you might be looking at a number back to the 74.28 level, and you might eventually say, hey, that's not so bad. Maybe the home builders ran the course. It is not a short sale here, in my opinion, even though it's embedded. I think you have to wait and see what's going to happen in the morning. In XLE, the energy sector, it still looks bullish to me. Yeah, you had a break. It's a normal correction break. I'm hearing a lot of people trying to pick tops in this. Why would you try to pick a top? Don't. I think you're better off buying the breaks as long as you've got the embedded reading. The next support level I see is 51.20. That's $3 away. That's a heck of a break. It's 8% from where you're at right now. I don't know that it's going to reach down there, but until that red line closes under 79, I contend the pros will buy these breaks. That's what I'm looking for, and even higher prices. EEM. For the emerging markets, you've broken down into the lower Bollinger Band region and oversold. I think the pros are out of these markets now. They'll wait and see. The problem is, even on corrections, what is going to be there to make the emerging markets look good? I just don't see it. I'm probably wrong, but I don't see it. I see higher interest rates for the foreseeable future coming at us. I see nothing to break the energy market. The U.S. and other countries have gone green. So they're saying we'd rather pay money to the OPEC countries. They can produce all they want. We're so smart, we'll go green, and they'll take our money. There's got to be something in between that can be done better than that. In GLD, the market, when it lost the embedded reading, and this is so important to take a look at. Right here, you lose it. That calls for the market to at least get back to the 18-day average of closes. Took a while, but you got up there, and that's where you're fighting your battle right now. Now, the trend is up because you have higher lows and higher high. You're over the 18-day average. So this market, for the first time in a while, has got an uptrend. You blow it if you get under 163.47, and you could have a target of those two moving averages in the Bollinger Band together up there. GDX, same thing. You don't want to be short, in my opinion. This is what I teach, at least. I told traders, you lost the embedded reading. You should be making a run now to the 18-day average of closes. Remember in the mornings, I put out for my traders a subscriber video. I'll talk to you about that in a minute. I am very bold in it. I'm telling you what to do. Here I talk generalities, but occasionally I'll tell you what I said because I have recordings to prove it. I don't publish a track record. It's not what I do. I don't want to manage your money. I want to be your chartist. I want to be the go-to guy that you go, hey, Ira, what's this chart look like? And in the morning, you get to see it right after 9 o'clock and you go, whoa, I see what he's talking about. So I was looking for that to happen. Just what happened, not hard to call. And that's if you take the enhanced Bollinger Band course. I mean, these things show, these are patterns that between the momentum and Bollinger Bands, they become what I will call tradable patterns. Nothing works all the time. So if you're saying, hey, walk on water, that's going to always work. Get serious. But it's money management. It's playing the odds. That's what you're doing with chart action. This is not investing. This is trading. Do we understand the difference that I'm talking about? If you're investing, why even looking at this? You look at your stock like Warren Buffett and you go, okay, for the next 5 years, this is what I think. You're done. If you're a trader, I want to be your go-to guy. Higher high, lower low. Are we embedded? So let's take a look. Both numbers here, if you take a look, not there. Both numbers are under 20 the next day, under 20 yesterday, and under 20 today. So what do I think? I think the pros are selling into this right here. The combination of the 200-day and the 18, they'll come out if the red line closes over 21, and until then, I think they're still targeting 141.87. Yeah, you're liable to get tomorrow a little bit of a move where the market gives back something, and the relief, if you will, the relief rally, let's call it that, because of the debt ceiling may become the market psychology of the day. Can you imagine if the Democrats say no? Then everything I'm saying here is out the window if they say no. Why they'd say no and want to shut America down? They're cornered. I don't see them as having the ability to say no to the deal that Mitch McConnell made. And for those of you that get my full research for my futures, I wrote a lengthy article on it tonight that'll go out just after 8 o'clock tonight. Lower highs, lower lows in the euro, still bearish. You've got an embedded reading. The pros should still continue to be selling this market. And here's something new for you, COPEX. I told you I wanted to add copper. And that's what I've done. So in copper, you got a higher high, lower low pattern, flat momentum. You do realize the event of the week. Where's China been this week for the copper trade? Vacation the whole week. They'll come back into the market for Sunday night. We'll see how copper then reacts. You've marked time while they're gone during this period. So, as I said, I would love to be your morning go-to guy. I have two programs you can go with. You can, number one, take a combo of the futures at 5:30 in the morning. That's when I start recording my futures video. And then this one follows it, or just take this one. This one I record at 9. It's out typically about 9:40 in the morning, typically. Why do I record, by the way, at 9:40 or 9 o'clock and it comes out then? Let's talk about that. So many government reports come out between 6 and 9 o'clock in the morning, Chicago time, that's where I live, that I like to wait for that. There's nothing worse than giving you chart information. There's a big report and we missed it. No, let's wait. So we give up the first half hour of trading. I'm recording right after 9. It's a 15 to 20 minute video. It takes about 15 minutes for it to render in the computer. So around 9:45 or so, it's typically out. Every Saturday I use something different. I know a lot of traders want the longer term picture, but off the charts. Well, I give you that because I do all the weekly charts at that point in time. You don't see these in other places. You'll get them right with this. So I start you off with the world events, the day's reports. I cover this, and I'm forever adding, okay? You just saw I added to it the copper market. How do you try it? Folks, spring. This is real expensive. It's $8.95 for 24 videos, each an average of 20 minutes long, that give you on the bottom, when you go to the website, you can pull a scroll bar and see what section you're in if you like that section. Then, in addition, I get clients that write me during the day. Ira, can you take a look at this type of chart for me and do it? I will do that typically for the people. Now, I'm not going to do it for the same person day in and day out. You know, I don't want to be your broker. But I will do this as you ask me occasionally for it, and occasionally can be several times here and there. If I have the time, it takes me 2 seconds to open the chart up, to hit save the image, and send it on to you with what I see. It's not that difficult. So if you like that type of hands-on help, go to our website under the word research. Everything's there. It's all explained. You sign up. That helps me too. By the way, if you like these videos, please hit like. I'm Ira Epstein. You have a good day.